Fantastic. Thank you very much. Welcome to our final panel for this evening. We are talking about due diligence and due diligence in a COVID world when, of course, you don't get to see the whites of the eyes of the entrepreneurs that you're going to be investing into, unless, of course, you're wearing a mask and you're keeping yourself socially distanced. So we're going to talk to our panel. We've got a very great mix of people who are joining us. We have lawyers, we have accountants, we have venture capitalists, and I'm going to start with the VCs. I'll pass this one over to you, Cody, in at the deep end. Post-COVID world, we're not there yet, but how have things changed for you in terms of getting to know the entrepreneur before you make an investment?
Surprisingly, well, first off, thank you for having me on. And surprisingly, our business has actually been fantastic. Zoom has made it so easy to actually sit down and have the opportunity to talk to, the CEOs, CFOs, chief medical officers, wide range of executives within the company. So, while I normally like to be on site doing face-to-face visits, this has been, just as good.
Okay, I'm going to pass this over now to Michael Astone from BDO. Due diligence, very important part of making an investment into a company, and of course, due diligence really sort of varies, based on the stage of a life of a company that you're going through. What would you typically expect to see at a very, very early stage in terms of the due diligence, which would be getting done on the transaction?
Thanks, Richard. And yeah, it's very important to be doing due diligence on early stage companies. These companies have a huge opportunity in front of them from the size of the market to develop new drugs based on plant-based therapies, to bring to market new clinics that can help treat PTSD, to help develop potential over-the-counter products from nootropics to naturopathic supplements. So when you're getting involved in an early stage disruptive sector, the biggest due diligence you want to do is on the people. Who are you backing? Who's the check that you're writing, and who's going to be your steward of capital? A lot of this is early stage for the sector. We're pursuing clinical trials. We're working on clinical roll-ups. We're bringing products to market, and we need to jump through a bunch of different hoops on the regulatory front. You want to see who's backing, what is their credibility, what is their track record, and do they have enough capital through the financing that you're participating in to execute on the plan that you're ultimately buying into.
Fantastic. Michael, we're just talking about due diligence into early stage companies, and the other Michael from BDO was saying, very much at the early stage, it's about investing into people and really understanding the talents and the entrepreneurs you're about to back. As you go later down the line and you start to write much bigger checks to those entrepreneurs, what are the things that you as a venture capitalist start to look for in those later stages of investing?
It's a great question. I think we've looked at about 250 companies in the psychedelic sector so far and invested in 17. And because of that, now we're looking at later stage investments. So for us, it's all about the science and the intellectual capital around the science and the technology of the asset or the portfolio company that we're investing in. Because I think once you have decided or convinced yourself you're working with a great team, I think that having the proper science and technology to help expand the business into the future is a crucial importance, especially in the psychedelic sector. So you're looking for people that have the experience of bringing molecules to market, getting through phase 1 or phase 2B, phase 3 clinical trials eventually, and those that have the capability to work with the chemicals of the molecules and raise money into the future.
Thank you, Michael. And actually that brings us, I think, quite nicely to Jayashri. Have I got your name pronounced correctly?
Yes, but you can also just call me Jay. It's much simpler and everybody's happier that way.
Jay. So Michael actually touched on a really good point around sort of intellectual property. And of course, psychedelic medicine, companies are looking to create substantial amounts of intellectual property. And if you're not a professional investor, and you're starting to look at all these amazing patents. They filed all of these patents, and they all say they're pending. That surely is a good thing, isn't it? I mean, they're going to get them all?
No.
Okay.
Well, it's a bit of a, you have to look at it with a critical eye. So just a bit of my background, because I think that gives context. I started life as a researcher. I have a PhD in pharmacology, and I came into patent law by accident. Literally, I got in an accident and I needed another job, so I became a lawyer. And my background is in pharmaceutical litigation, patent litigation. So I've seen how the value of a drug is defended. It's in patent litigation because you get regulatory exclusivity for a certain number of years, but the life cycle of a drug, the actual value lies in how well you can defend the patents that really protect the brand value. So when you are looking at the due diligence and you're looking at all the patents that are pending, and when you have a patent, when you say a patent is pending, you're looking at not just one patent, but how many continuation patents are going to issue out of that. What is kind of the pipeline of patents, that patent applications that are going to develop out of it. So you're looking at it with a very critical eye. You're looking at it from the perspective of not these claims absolutely are going to issue, but what the technology promises. So when you are looking at something that has just been filed, say a provisional, you're looking at it with one kind of perspective. When you're looking at a patent that has undergone a significant amount of prosecution or something that has been granted, that's the gold standard. The patent office has granted you your rights. That gives you a certain amount of certainty. Yes, this I can invest in with a certain degree of certainty. Versus you have a portfolio. You have applied in a number of countries. You are close to grant in a number of countries. You have a greater degree of certainty. So the answer for due diligence is, where are you in your portfolio? Where are you in your grant of rights? And if you have a significant of expertise on your team, you can look at the application, because the quality of the applications also matter. You see applications, and if you have a team of experienced prosecutors, they can tell you that, well, perhaps your investment should be cautious, or you can have the prosecutors and they can look at it and tell you, well, this looks like a lot of thought has gone into the strategy, the perspectives, the way the claims have been drafted. So if you just tell me, I've got a patent pending, that doesn't really tell me very much. Show me what you have pending. Let me look at it with a critical eye. Let people who have a lot of experience in patent prosecution and patent litigation in looking at portfolios assess the value of your portfolio, look at the value of your intellectual property, and then I'll give you my answer. There is no one answer that fits everybody.
And at what stage? Thank you. And at what stage? Because of course we are talking here about people who are potentially writing, relatively small checks if they're not professional investors. These are people who have got a passion for psychedelic medicine. Obviously, engaging in, with legal counsel to do a full drains up on the patents is quite expensive. But if somebody was really just sort of, was just wanting to sort of try and get a degree of comfort, what would you be able to sort of suggest to them if they had to sort of take sort of one piece of advice away from this, apart from engaging a professional lawyer?
Well, educate yourself. It's not, you don't always need a professional lawyer. You need to educate yourself, because the fundamentals, they're out there. You can go to the patent office's website and you can learn what are the basic pitfalls that you should be looking for. You can be going to various blogs. There are numerous blogs that talk about what is good and what is bad in patent practice. So it's a question of educating yourself as an investor. It's your money. It's your risk. So if you spend the time and you can educate yourself on what kind of risks there are out there when you're investing in a company in terms of its IP, in terms of how patents are issued, what is the trajectory of a patent prosecution, then you can make up for yourself what are the risks. I mean, if somebody comes to you and says, I have a provisional patent versus somebody comes to you and says, I've had my notice of allowance, you can see for yourself where you are in the trajectory. A notice of allowance means you're about to get it, and a provisional means you're very, very far away. So you can make the risk assessment for yourself.
Thank you very much, Jay. A question for you, Mitchell. We're just going to sort of touch on Canadian share structures, if we can. If that's an area you're comfortable diving into.
Well, I'm not a securities lawyer, but I can try.
Okay. Really, what I was going to go down, because one thing that I've noticed, and I'm relatively new to investing into Canadian companies, is that the share structures that are used in Canadian companies don't tend to be a similar reflection what we see in Europe and what we see in the United States. What I really sort of wanted to go to was just some things that what people need to be sort of really, really careful of when they're looking at Canadian share structures before they make an investment. And then I'll pass it over to Michael Franks from Noetic for a pickup as well.
Okay, so I'm not sure I'm very comfortable giving a definitive answer outside of saying a couple of things. One is, I don't know the expression in Latin, but it's something along the lines of buyer or investor beware. Very often, early stage investors, particularly ones that have been around industries like cannabis and mining and so on, are going to look to get preferential privileges or pref shares in these kinds of investments. That puts them in an advantageous place in a whole bunch of ways, including getting preferences around conversions, governance, as well as interest payments and so on and so forth. So for your average retail investor, you should be very diligent and do your homework in terms of what kind of shares you're actually getting vis-a-vis the founders and other early stage investors. What often happens is retail investors don't end up getting those preferential shares and end up having less rights than other early stage investors. So that's one thing right off the bat. Know what you're getting for the money that you're investing. Number two, obviously, is invest in good legal help to advise you about that. And I think that's fundamentally important. The third thing I'd be very interested in knowing if I was an investor is I'd like to see what the cap table looks like. And what do I mean by that is, who's on the balance sheet, who owns this company, what kind of shares they own, and what are the implications from a governance perspective. You don't want to be in a situation where you invest a lot of money in a company and have very little control for that money, and have others who've invested less or who bring, let's say, a name brand to it, end up controlling the company in many ways through voting shares, and you'll be on the outside because you haven't done your homework. So I think a share structure is a fundamentally important question, but you have to measure the risk versus reward within the particular share structure, as well as the company, as well as the management team, in terms of what we heard before.